Welcome everyone, I've been asked to show you how to trade the Silver Bullet during unfavorable market conditions, and with this video I will explain you how I trade during these situations. First of all, what I mean by unfavorable market conditions. Let's imagine you are planning to take a trade during the PM Silver Bullet. You analyze the chart, you mark the zones to buy and the ones to sell, and then you arrive to the point where you need to understand where the next liquidity grab is going to be, but you cannot decide which one to choose. Exactly when you are in a situation where you cannot read a clean price action, this is what I mean by unfavorable market conditions. And when it comes to trade during such days, you have two choices: or you trade or you don't trade. If you want to trade, then we can continue the video on the chart. So if you don't understand where the next liquidity grab is going to be, first of all, you need to zoom out. I know that everyone who wants to trade the Silver Bullet would like to trade only the 1 minute chart, but in order to execute a very good trade, you need to check several time frames, because if you watch only the 1 minute, you will end up losing the trade. Even if you enter at the fair value gap after a liquidity grab, after a break of structure, still you need to look also at the higher time frames. The 1 minute chart is very cool because it's fast. You can get money really fast, but you can also lose money fast. Sometimes you can win the trade, but many times when you win the trade and you trade only the 1 minute chart, it can be only luck, because you need to understand where price is sitting at on the higher time frames. Here I made an example of an intraday price action. Here the daily start, okay, and let's imagine that this is the 5 minute chart, for example. You can see that price was consolidating before the AM session. When I'm talking about AM and PM session, we talk about the New York local time. So this line will be at 10 AM and this one will be at 1 PM. We saw a liquidity grab below this range and also above, and then price broke the market structure to the downside, and with this we can already understand that the sells could play out better than the buy. Let's imagine that here there is a fair value gap and we are also in the premium area here because the 50% is here. But what's the problem? That we have one swing high, this one, where we could have a potential third point up here, because don't forget that the number 3 is always very important in trading. Let me show you some examples here on the chart. This is the daily time frame, but I'm sure that I can find some examples where price shows the importance of the number 3. Here, for example, look, 1, 2, and 3, we get the reversal. Same story here, 1, 2, 3, the reversal. The number 3 in trading is magical. This is not so clear, but 1, 2, 3, reversal. Let's go back to this example. In this moment we are here. There is a 50% of probability that price could go up to the previous swing high and a 50% probability that price could go down here. And to think like this, it is exactly right, because you're watching only the intraday price action, which is not clear in this case. If you take a trade only watching this, you're missing something. So it's like to go to gamble. Let's go to watch now. If you would go on the daily time frame, for example, this is the daily candle at this point. The weekly started here. It took out the previous weekly low. Let's imagine that this one was the weekly low of the previous week. Now that we see the daily chart, we understand something more. Let's analyze a second this chart. Price left a fair value gap here, which needed to be filled. Once it tapped into, it took the liquidity of this Friday candle and started to reject. And if you see, Thursday we saw the third point. Price went deeper inside this fair value gap and it still needs to take out the low of yesterday's candle. So now that we see this, where is price more likely to go? In this case, price could take out this yesterday's low, and also if you look better, you can see that there is a fair value gap which was left from the candle of Monday to the candle of Thursday. Now that we analyzed also the daily chart, it makes more sense in this case to take a sell, even if we had this minor change of character. With the line chart which I did, it's difficult to show you where a fair value gap could be, but let's imagine there is a fair value gap here and then you have also a fair value gap here. A lot of traders during the Silver Bullet don't watch the higher time frames. They see a change of character with the fair value gap and they enter here, but they don't see that the price just tapped into a daily fair value gap and it is rejecting. This was a simple example, but I hope you understood how to trade unfavorable market conditions without any clear price action on the lower time frames. But if we zoom out, we can see a very clear market structure. Everyone wants to trade lower time frames because they're fast, but without the higher time frames you will not go nowhere. Thanks for watching. Leave a like and a comment. You can write me also some topics which you want me to talk in the videos. And that said, we will see us in the next video.